Diane Swonk, chief economist at the accounting firm Grant Thornton. She joins us now from Chicago. Diane, if we look at these numbers, which is the more serious number? The fact that growth was down, job growth was constrained, or that wage growth actually is ticking up?
Well, they're both from the same survey, so they're both distorted a bit. The slowdown in job growth was largely in part to really unseasonably bad, even unusually bad winter weather, big loss in construction employment that we do expect to come back a little bit. Also, we had some losses because some of those government workers that had taken on a second job to make up for their lost pay, they got off that second job, so that came out of the numbers. And we had some teachers' strikes as well. That's one side of it. The wage gains are picking up. That's the good news. They're up a tenth from the high we had hit in December, but they're also distorted by the composition of jobs that we created during the month. Only 20,000 net jobs, dominated by high-paying jobs and professional services. Right. That helped to buoy those wage gains from a year ago.
So, if you had to give this an interpretation on this report, bearing in mind that the revisions on the previous months were very small, which suggests that the trend of the slowdown is taking its toll.
The slowdown is taking its toll. I look at this sort of on a moving average basis. The 3-month moving average is about what we had seen in 2018. The first 2 months of the year are slower, and I expect that to continue because the economy is slowing. The first quarter is going to be a lousy quarter. We're going to bounce back a bit in the second quarter, but overall growth in 2019 will be slower than 2018, and with that, we'll see a slower pace of job growth as well, a much slower pace over the course of the year.
Stay with me, because at the moment, as you'll be aware, Wall Street's marking 10 years of the bull run. So, 10 years ago, I was sitting in this very spot when, with hindsight, what we now understand, stocks hit bottom. Listen to that, and I'll come back to you in a second, Diane. Good evening to you. I'm Richard Quest. This is Quest Means Business. We're starting a new week, and I'm afraid it's a new week, but a same old story. Susan Lasovich at the New York Stock Exchange. Susan, now, when I just looked a second or two ago, it looked like we were best part of a ton down on the market. Has it come back a bit? Well, we know the market did come back. Look at how it improved. The S&P, by the way, Diane Swonk, it's your 300% gain over that period. So, how much, Diane Swonk, is because cheap money from the central banks made the bull market inevitable?
Well, that certainly was a major factor. There was also a major announcement right about we're going to see on 60 Minutes the Chairman Powell, Ben Bernanke, and Janet Yellen, former Chair Janet Yellen, come together and talk about what happened 10 years ago. 10 years ago at this time, it was when the Fed first did their quantitative easing. They announced that they would buy in the mortgage-backed security market, and just that announcement alone started to turn things around. Before they ever bought one mortgage-backed security, the market started to come back, and I think that's very important. It's not just the fact that the Fed fed financial markets. Financial markets took down the economy. The only cure was to fix financial markets, and that gave an uneven kind of growth, and then we missed the fiscal stimulus later in the expansion, and that was taken away.
So, on the basis of the economic scenario, the landscape that you see now, are we good for a few more years of the bull market?
I'm very concerned. My biggest concern is China. We've seen more bad data come out of China, and it's not just contingent on a trade agreement with China. The weakness in China hit before the tariffs hit in China. They've got a structural problem, second largest economy in the world. They've been a major push on growth of the global economy. You're seeing weakness in Europe. You've seen the ECB react to it this week. These are things that concern me, that tell me we're losing some of our stamina.